as compared to what frontline indices really did. So that's the bell, and you've got the first rates coming up on your screens. It's 22,928. It's flattish, 30-40 points lower right now. Sensex is down about 100 odd points. I mean, it's not a bad start, I would say. This gives you the opportunity to, if you think that, things are going to stay up, and generally overall the environment is going to stay positive. And of course, I mean, there's a big call on the elections as well. This gives you the opportunity at some point to get in. So 22,918 is where we're at, about 40-50 odd points lower. 40, 50, 60 point swings come so easily nowadays. I mean, just a couple of minutes and you're from down 50, you're up 50. So keep an eye as we go along. Mid-cap index is down about 0.14, and the small-cap index, I think, is also slightly lower to begin the day. Advance decline, though, is interesting. Almost full 2:1 in favor of advances. So that buoyancy, that vibrancy is very much there, and it's all about stocks. So Sonia has got that list. Sonia.
Well, thanks a lot for that. So let's kick it off with Interglobe Aviation, right? You have a very good set of numbers that has come in, 6th consecutive quarter of profitability. So Interglobe Aviation up 1.5%, picking up pace now. Morgan Stanley has a huge target price of 5,162 on the stock. Street definitely likes what they're seeing this morning. Apart from that, Honasa Consumer is really the stock of the moment. It's 5% higher as we speak. Strong growth, much higher than the industry. Underlying volume growth of 27%. Reported a profit this time around. The street likes that. In the heavyweights, I'm looking at HCL Tech because there's some news flow there. They've acquired HP's Communications Tech Group assets for $225 million. The street is not that impressed. Flat move on the stock right now. Sun Pharma is the other one. The shareholders have approved the merger of Taro Pharma and the company. So Sun Pharma just a tad bit in the green. UPL and Aarti Industries have formed a JV company to manufacture and market specialty chemicals. So UPL is up, Aarti Industries is also up in the green. JK Lakshmi Cement, EBITDA has gone up 46%. Margins have improved substantially. The street likes that, 4.5% higher on JK Lakshmi. Brigade Enterprises has signed a joint development agreement to develop a project in Bengaluru. The size is about 720 crores. So Brigade is up about 2% Fortis Healthcare margins have improved. The hospital's business revenue is up in double digits. The street likes that, up about 1.5%. CESC Q4 numbers are largely in line with estimates, but the stock is down about 3% Shilpa Medicare is the other one. Good numbers actually from Shilpa Medicare. The stock is up 3.5%. It has been a erstwhile favorite of the market, and once again picking up pace now. Zaggle revenues are up about 46%. Adjusted EBITDA before the ESOPs are up about 9.5%. The street likes that, 5.5% higher there. Puravankara, the margins have come in much higher than what they saw last year. So keep an eye out on that. And Transformers and Rectifiers is the last stock I'm looking at. They've bagged an order worth almost 360 odd crores from the Adani Group and L&T. So Transformers and Rectifiers is up about 5%. But let's get back to looking at the market, which is not doing much right now, which is actually a good thing. The Nifty is hanging, tight around the 22,950 mark, just shy of 23,000. Big milestones being hit in the market lately. Sensex crossing 75,000, Nifty almost at 23,000. So not a bad opening at all. Flat at this point in time.
Thanks a lot for that, Sonia. Well, as you took us through that neat market start, we had the Nifty Bank that recovered 200 points from the day's low. So that's telling you the kind of mood that the markets are in. 48,645 is the low of the day. We have bounced exactly 200 points off that mark. A few stocks that are doing well from the broader markets, though. Johnson Control Hitachi, strong operational performance in Q4. That was driven by their cooling business. So out there, you had big revenue growth of more than 40%. The margins came in at around 10.5% odd. So, that stock should come off for you on the screen. Johnson Controls Hitachi. That's the one that's gaining. On the flip side, you have Orchid Pharma. The margins did compress by close to around, 500 basis points, coming at around 13%. So that stock, in fact, is down close to around 5%. Orchid Pharma should come up for you. Landmark, that's the other casualty this morning. It's down close to around 6%. The higher OPEX, that's what's hit their profitability. So that stock is well down close to around 7% or thereabouts. And Godrej Properties has a newspaper article that's stating that the Defence Ministry has objected to one of their projects here in Mumbai. And they're looking at suspending work. So we'll have to get further clarity on that one. But for the time being, that stock's a little bit under the weather. A few gainers, though. Bikaji is reacting positively to its numbers. So that stock's higher. While you have Bharat Dynamics as well. I think that one opened up well in the green. So quite a bit of action from the broader markets.
the top volume-led gainer right now is Idea. By the way, the Nifty is recovered, right? We were talking about that 55-point lower start perhaps could be used as a bit of an opportunity with a positive view on markets from a slightly next 5, 7, 10 days kind of perspective. So there's a 50-point bounce nearly, which has already sort of taken place. Idea is the biggest volume-led gainer, 4% higher, so 14.5. I think UBS is now, in terms of their price target, the highest in the street at I think 18 rupees. Cochin Shipyard is coming with a 4% pop. 1972 is where Cochin is at. There is Zaggle, which I think we highlighted, 4%, 327. Finolex Cables is up 9%. That is at about 1247. There is Aarti Industries, which is coming up with about a 3.6% pop. Stocks at 650 right now. Honasa, Mangalam was pointing that out, 5%, 5.5%, 440 on Honasa right now. And I think JK Lakshmi, we highlighted 6% higher right now. Stocks at about 839, 840. Brigade is up about 2%. There is PG Electroplast, which is up about 2.5%, 3% or so. Shakti Pumps, I mean, you want to move on Shakti Pumps. It's a small company, but massive move. Last couple of days, it was a bit soft, but back up about 5% now on that one. Go Digit, which is the listing from yesterday, is down about 2% or so, 300 on Go Digit. I saw initiation on Go Digit from one of the brokers with a sell to begin coverage. Chola Finance is down 2%. Paytm is down about 3%, 347 on Paytm. And it's got large volumes for this point in the day. And there is CESC, Inox, Wind, and Viatech, Vabag, etc. Viatech is down about 2%, 950 or so is where that is at. Landmark Cars is down 5% as well, 725 on that one. The market overall on the Nifty, absolutely flat. Ajit.
Just one more stock, Indian Metals and Ferroy. That's one of the stocks that we highlighted earlier this morning. Yesterday, the stock was down close to around 4% odd. They've come out with some clarification post-market hours. And also, there was big delivery-based buying. Tell you, one of those sellers are out of the way. So, explains why that stock has bounced back close to around 3%. We highlighted this earlier.
All right. So, that's Indian Metals up about 3% or so to begin the day. Vineet Sambre is with us, Head of Equities at DSP Mutual Fund. Vineet, good morning. Good to have you with us here. Thanks very much for your time. The banks yesterday participated. It's the large FII-owned sector, etc., etc. And FIs have been big sellers through the course of this year so far. That underperformance, and it's also, by the way, still it ranks, in the pole position whenever we ask which is the sector which is poised to do well, largely because of valuations, etc. Do you think its time is starting to come into the horizon? It's already started. What's your view broadly, Vineet?
So I think I would agree, and I have been even stating this on your channel many times in the past, that overall I think we have been quite constructive on the banking sector. In fact, we've also had our own thematic fund, which is a banking sector fund, which we've launched a few months back. And this is all to do with the key metrics, which is, we have decent growth. The sector actually is showing. The most important factor, which is the quality of assets. I think on that parameter, the bank, including the private sector and the PSU banks, they are at a multi-year best when it comes to the asset quality. And I think that is one of the most important parameters to sort of focus on. I think beyond that, as we look through the next few years, anyways, the markets are seeming to showcase the recovery which the economy is poised to actually have. And, if one would like to really play that momentum, banking sector remains a proxy to that. And hence, we believe that banking sector overall looks good. A small bit of a technical factor when we compare the banking sector performance to let's say the bank index to the Nifty index, it has actually moved in a specific range. At the current level, it is at the low point of the range. So which makes it even more, relatively better from the perspective of a relative outperformance, which it could showcase from here on.
By the way, there's plenty of stocks that are moving around. Vodafone Idea has some upgrades going for itself. Many upgrades actually. UBS has upgraded Vodafone Idea to a buy. So that stock is up almost 4.5% as we speak, picking up pace now. The other one I'm looking at is Finolex Cables. It's a 12.5% rally on that stock. We've spoken about that, but numbers are not bad at all. Double-digit revenue growth, 14% revenue growth. EBITDA is up by 16%. Margins have improved. So Finolex Cable is really taking it away at this point in time. Vineet, hi, good morning, and thanks for joining in. We were talking about how some of these pockets are really looking good this time. If you talk about the new age tech companies, the platform companies, right? Whether it's Zomato, Nykaa, Honasa Consumer as well, all doing pretty well. Is this a space that investors should look into now for the longer term?
Yeah, so clearly, I think Sonia, some of these companies have seen turnaround in terms of the performance, profitability, but a lot of that has really got captured in the valuations, is what I feel. Maybe these are now, let's say, good businesses to keep under your radar. But from the valuations perspective, we would be happier to own them at even more comfortable valuations, but not at the level today, because I think a lot of these good news or turnaround in the performance has got fairly captured in the valuation, is what I feel.
Okay, all right. Hi, Vineet. Good morning and good to see you. And I'm getting worried as a consumer because airfares are going up. Interglobe Aviation is doing well. I think the last time we chatted, we spoke about telecom rates as well going up because that's likely to happen post the elections. And since, Sonia briefly mentioned about Vodafone Idea, let's talk about the telecom pack. How do you approach this space? Some of the biggest returns actually have come from there. Whether it's Vodafone, whether it's Bharti Airtel. I think Bharti Airtel is close to have doubled in the last 18 months or so.
You should also be happy as an investor because top price is also going up. But anyways, as far as the telecom...
If you're an investor, Vineet, for us, as of now, we are customers, and hopefully some of my mutual funds have that.
Sure, I'm assuming you are invested in my fund. But anyways, separate of that. So I think as far as the telecom business is concerned, definitely, or any, you take any business actually, whenever we see the ROEs inflecting from maybe at a level which are lower than your cost of capital to going beyond the cost of capital and the cash flows are improving, businesses come out of heavy capex mode. I think those are the periods where those segments see inflection in terms of the valuation and re-rating, which is what we saw in case of telecom businesses. When we hear the large companies talking about the moderating capex plans in the future, a good amount of cash flow generation in the future, the ROE is inflecting, and the possibility of the ARPUs also going up in the near future. I think those are the key metrics which would determine the re-rating factor for these companies. And also, as a matter of cautioning again, the ARPU increases have been pretty slow in the past. While there is a lot of built up and hope that these increases will take place, it is very pertinent that for the rally to sustain, the ARPU increases need to take place on a timely manner. If it doesn't, then I believe that this could fizzle out in future as well.
Okay. By the way, record highs for the Sensex, 75,500, milestones getting hit day after day, and lots of positives, right, for the market as we've been counting them, whether it's political stability, policy stability is what the street is now penciling in. You have global cues which are positive as well, stable over there. A lot of the geopolitical issues are out of the way, so markets hitting record highs. But Vineet, which are the pockets from the earnings that you've liked this time around? If you had to, if I give you a blank check and said for the next 12 to 18 months, which are the spaces that you would put money into now from a long-term retail investor standpoint?
So I think clearly there is a divide in the market. Overall, the market may look, let's say, reasonable in terms of valuations, slightly higher than the average. But the divide is very large. You have one category of the segment which is very expensive, and then there is category like banking, insurance, and all, which is not as expensive. So I think a good portfolio would actually try to create a balance between the two, because on one side you also have growth backing up. But specific to your point, Sonia, I think if one has to look at segments which we like as of now, I think again it is a combination of some segments which are in momentum. So I believe that the segments which are related to the real estate sector should see some benefit of the growth which is happening in the real estate sector. So that is one which I would like to sort of focus on. Auto ANCs are specifically doing reasonably well, is what we have seen. And this has been the category which we have been positive for a while. we believe the continuity of that growth taking place, and the companies which are, as I keep saying, focusing on technology neutral areas, focusing on diverse geographies. I think those are the companies within the auto anks which should do well. The third space is, I think, the segments which today are not doing well but could cyclically turn around over the next 2 or 3 quarters. Within that, I would believe that a large part of the consumer discretionary today are still not showing any signs of recovery. We are seeing the results, but I believe the bottom is getting sort of created there, and the base is becoming favorable for them over the next 2 or 3 quarters, maybe. Specialty chemical is a segment which has bottomed out to my judgment. And I think that's one category which one can sort of focus on. So I think these would be the areas which I would like to focus on as of now, Sonia.
Okay, you mentioned specialty chemicals. Vineet, what about metals? I don't think there's been so much of buzz in metals for a long time. And we've heard this in the past. This is that super cycle. This is a mind-blowing cycle. A lot of people are getting in. But are they getting in a little bit too late? Or do you think it still has some runway?
So, unfortunately, I've always got my metal call wrong. This time around, only difference what I see with the companies, first of all, it is very difficult to predict these cycles because these are linked to the, global metrics, and things are very volatile globally is what we all know. So I think taking a very definitive and a strong call on these segments hence becomes very difficult. But right now, I think things have become slightly relatively better because the balance sheets of most of the metal companies have improved significantly. My metal analyst tells me that over the last 20 years, he has not seen these balance sheets become so good and strong. So I think from that perspective, it would be good to capture these businesses at a low cycle.
Okay, all right. Vinny, just hold on to that thought. The breaking news that's coming in now is that the Nifty is at around 23,000 odd. Hormuz has sent us some data points out here. It took us around 64 sessions to move from around 22,000 to 23,000 odd. And this is a big, big move that we're seeing. Talk about hitting 22,000 on February 19, 2024. From there, a big move. Stocks that have been leading this last 1,000-point rally. You have Hindalco from the metal pack, Mahindra & Mahindra, Eicher Motors. These stocks are up between 25 to around 40% just in the span of around these 64 sessions. And big moves being seen on Bharti Airtel, Tata Steel. Well, some underperformers though. The tech pack hasn't participated. So there's been one segment of the market that's not really participated. That's HCL Tech, Infosys, Wipro. But 23,000, and guys, I love it, to be on television when we hit a new milestone.
I was just thinking, Nigel, when I joined in 2008, right, the Sensex was at 8,000. It had fallen that day, I think Lehman collapse, and now almost at 80,000. So it's like this 10x jump that we've seen in the market, right, over the last...
Guess what the Nifty was when I started television?
I don't know.
I was just checking.
2,000?
No, at 1350.
Wow.
guys are too old.
Yeah, too old. Yeah, we're too old for all this. Yeah.
But you have seen all the milestones.
But it just puts it into perspective, right? That we talk about the here and the now, today, tomorrow, volatility, this, that. But at the end of the day, the kind of compounding that this market has done over the last 10, 15 years. And, I was just looking at it, you barely get 2 or 3 instances where the market really rallies in a short span of time. And we've caught that maybe once in 2008, once in, I think, the best one was in 2020. So, you just have to sit through the ride.
And the equity cult here in India is getting developed. It's shaping up very, very well as well. And, investors are showing maturity, which will be good news. The next generation as well will be more involved, and we'll see a greater participation that's coming in there. So believe in this market. If you're investing for a longer span of time, you'll get good spurts and you'll get some pullbacks as well. Keep allocating. The music is playing. You have to dance a little bit.
I agree with everything you guys said. So, but I'll also add a word of caution for a lot of new people, which is that don't go berserk with keep an eye on valuations, keep an eye on what you pay, because at the end of the day, the point that you buy, if you pay excessive amounts, then over a period of time, and it's happened in the past. Mean reversion, we've not had a powerful valuation-wise mean reversion for a long time now. So, but that always plays out. Don't pay 100 times earnings, because then you're kind of limiting what you can do over the next many years. And, So keep that in mind as you look at these milestones and absolutely participate, make money, but also be prudent with what you pay out there.
You know, I have to share one incident with you folks. So I was recently doing the podcast with Deepak Shenoy, and he was telling me that every time, you know, he has a sort of alarm bell, right? Every time his local panwala comes to him and asks him what stocks to buy, that's when he decides that, okay, you know, now we've peaked, because it happened to him in 2007, it happened to him in 2019. He's like, this time it's not happened yet. So which means that the market is still not in a euphoric stage yet. But yeah, I guess caution is always taken.
You know,
what I would like to see is that the Panwala starts as SIPs. You know, that's when you believe that the investor is actually maturing. You know, your house help, your chauffeurs, when they start participating, and mine do. So, you know, they put a small amount of money out there. So I believe that's why I say that this market is maturing, and over a longer span of time, our kids, their kids, everyone will reap the benefits.
From it. Yeah, of course.
All right. Well, so that's a new high which we're talking about, and I think. What do you think, guys? Bank Nifty at 50,000 will be more punchy?
That's in the next week.
50,000 rolls off easier, right?
I mean, yeah, I mean, we're not too far away from
in the
that.
Next week, 50,000.
We're there. I think we almost made 50,000 on the Nifty Bank, and then, of course, we didn't quite hit that number, but for all practical purposes, we were there.
You know, Prashant, another thing, right? I mean, all the guests who we speak to tell us that they are not too worried about the election outcome. They want the election to move out of the way, and then the policy continuity is something that they're looking at for the market. So, you know, for all of you who are still worried about what happens during election, what happens post-election, I don't think that really matters in the longer scheme of things. If this policy continuity is something that the government is looking at, if there's no negative surprises in the July budget, it's just par for the course, the uptrend, I guess.
Absolutely. You know, we'll sort of come back to the market with more as we go along, but let's talk about some homegrown businesses now, right? I mean, that's where bulk of the wealth creation has really been made. And I'm talking about Mankind Pharma. It's been a year since Mankind sort of made its debut on stock exchanges. Stocks up basically almost doubled, 90% if you want to be precise, since listing. And, you know, phenomenal sort of run the company is having, both business-wise and market-wise as well. So what's the way forward and what is the company's revenue target now that it has crossed the 10,000 crore mark in FY24? My colleague Ekta caught up with the company's vice chairman and managing director, Rajiv Juneja, for this and more. Listen to that conversation.
Mankind has always talked about this, that we always would be working towards making sure that company is having bigger market share and bigger share in chronic side. We'll always try to go for consumer side. We'll always have talked about that anything which is there for entry barrier, we'll go for it. In the past, we have seen many things and we have rejected many things. We have seen big and small in last couple of years. Look at the history of Mankind. 2 products from Dr. Reddy. One is Steady, Daffy, and the second basically is Combi Hale. One is Panacea. Again, when we took Panacea, we saw that it should have entry barrier products, it should have patent product, it should have chronic side. We have done that. So as far as the financial discipline is concerned, or certain things are there where our conservative kind of a nature come forward, we're always there because you cannot change your nature. So it's just making ready yourself. Once you become an IPO company, you learn a lot of things from other companies as well. Our peers do the same thing. If in the past we had this 10,500 crore rupees kind of instrument, now we have added 12,500 because you're always in the market, and it is not that every day you get some opportunity. Once in a while you get an opportunity. It's making yourself just ready, nothing in haste, nothing aggressive, nothing which will ensure that our EBITDA goes down. We'll always think anything which can add value to Mankind. It should be most important, EBITDA accretive. The company's EBITDA, whichever company, should be bigger than ours EBITDA.
All right.
But these are certain precautions you make. These are certain things you learn from the market and you go ahead with those.
All right, fair enough. So it's an enabling resolution. But could you clarify for us on whether the company is exploring Advent's stake in BSV?
I cannot talk about this because a lot of speculation is there. You understand how these things really happen in the market. Number of reports starts coming without any kind of a solid reasons and things are there. I cannot accept or deny. These are all speculative. Once something solid will happen, let's talk about that. But again, I want to reiterate, will always be thinking from the point of view of mankind. Will it be EBITDA accretive? Will it be adding some entry barrier products? Will it add some kind of a consumer side products? Anything. I'm not talking about, because in the past, many things came to us. Many things are still there in the market. But we have never been speculative. We have never been, over aggressive. We've always been conservative because you cannot change your basic nature. You have some basic nature. You cannot change that.
All right. But the valuation, let me put it the other way, while you haven't accepted and denied whether or not you are interested in Advent stake in BSV, the valuation is pegged at $2 billion for 100% stake. Would that size of an acquisition be something that mankind is looking at?
Absolutely not. It is too much. If somebody says 3 billion or 2 billions, 2 billions have how many zeros, we know it very well. How we build this mankind, we know it very well. So we have a kind of a philosophy. We are organically build up company. We'll never go very speculative. Any speculation is not right for us. At any given time, we know our strengths, we know our weaknesses, we know what we can do.
Sure.
So, whatever something comes in a newspaper is just a speculation.
All right. Well, the other report which actually was circulating is Healthium Medtech. That is, in fact, a surgical suture staples company. So it's away from what mankind traditionally does. That valuation was around $1 billion. Would you like to clarify whether you were in the market for that?
Yes, I can say that we were there, but we did not go for that. Again, look at that. So once we find that the valuation was too high, we say, no, we'll not go for that. It was not for our thing.
Okay. All right. But would you look to diversify into a completely different segment, such as medical devices?
No, madam. Anything which basically has some kind of entry barrier, something. Just remember 3 things, rather 4 things. You'll meet me after 5 years. We're just doing the same things. Entry barrier is 1. Chronic side is 1. Consumer side is 3rd. And 4th basically is EBITDA accretive. If no, no. We are very firm on these 4 things. We remember it always. Anytime we are looking at any entity, our thought is only one. It should have these 4 things. If no, we say no.
Fair enough. You have over 3,200 crores of cash on books right now. What is the utilization plan then?
Once we have the money, it is not for the dividend. It is there to really put the money at the right place. So we always think, how can we just add some kind of a value to mankind and mankind shareholders? How can we deploy that funds? So that's one reason. When you go for shopping, it's not a shopping mall. You go and you see everything is there, and you can once in a while something comes. Once in a while, so we look around, but it does not mean we are in a hurry to spend our money. It is hard-earned money. You just keep it as it is.
Okay.
If something nice would come, again 4 things I take it again: EBITDA accretive, entry barrier, chronic side, consumer side, all right. Otherwise, no.
All right. Okay. All right. That point is taken. In the past 1 year, and I think it was just a couple of months ago that we had the promoters sell around 1.6% stake in the company for around 1330 crores. What was the reason, and any kind of further pay down from the promoters?
See, the point basically is what we are very aggressive company. Once we decide something, speed is everything for mankind. We were supposed to come below 75%. And that's one reason we came to below 75%. Why to wait? Go for it. Do it.
So any further selling expected?
No, madam.
Okay.
No,
all right.
no.
Okay, let's do one thing. Let's take a quick commercial break. On the other side, Abhay Soy of Max Healthcare will be joining in to talk about their Q4 earnings. Stay with us.
Welcome back. Well, let's focus on another management as promised. Max Healthcare now, their Q4 revenues, well, it's up in double digits. The margins are maintained sequentially, but profitability a little lower on a year-to-year basis, though the numbers on the whole were very, very good. Mr. Abhay Soy, the CMD of the company, joins us on the show. Hi, Abhay. Good to see you in, and thanks a lot for joining in. Well, a solid set of numbers. Let's get through the basics first. If you could tell us, what's the RPOB guidance from here on? Last recorded numbers around 78,000 odd. And also occupancy. The fear, Abhay, is that, you're peaking out in terms of margins. Do you agree, or do you believe that you can sustain it at current levels?
Absolutely. I think we can keep sustaining it. And we are not so preoccupied with margins, so to say. We are more preoccupied with EBITDA per bed. The higher end business, the better payer mix, the better clinical mix, although it gives you higher margins in absolute terms, in percentage terms, it has lower margins. So, in due course, if the margins in percentage terms go down, but in absolute terms go up, we are more than happy about it. Eventually we have beds and we have number of days in a year. So EBITDA per bed is the most sort of important indicator. And we've seen that being sort of ramping up. Again, just coming to your first point about the net profit, although it was marginally lower, it was largely on account of fair market valuation of the contingent liabilities, which you have to do a fair market valuation, and there was a change in that pricing. So it's a non-cash item. Besides that, so that was the largest impact of about 31 crores onto net profit. Other than that, there's about a 25 crore impact due to tax, which is the effective rate of tax, which has gone up. And due to the two new hospitals that we bought, although they were 8 crores EBITDA positive, they were 11 crore net PAT negative, because we have transaction expenses also. Otherwise, like for like, even the net profit has increased in excess of 20%.
Okay, can you give us the exact level of the RPOB? I mean, the concern has been that overall occupancies, RPOB levels have hit a peak, not just for you, but for the industry as a whole. So for you, what are you looking at as an average RPOB for FY25?
We've been answering this question sequentially every quarter for the past 15 quarters. And you will see again in the next quarter that the RPOB should go up in my mind, and sequentially as well. There continues to be a lot of leg room in terms of RPOB. It's not due to pricing. Pricing impact is only 2.25%. But we keep moving up the clinical mix as well as the payer mix. Do keep in mind we have a capacity constraint, so you'll see a lesser ramp up as far as the occupancies are concerned. But because we have a lesser sort of opportunity in occupancy, you'll see more of a ramp up in RPOB, simply because we have to distill the payer mix and we have to distill the clinical mix. Once we have the new capacity, you'll probably see increase in RPOB tempering, but you will see a ramp up in occupancy.
Got that. So RPOB's at 78,100, right? And you're saying that it should improve going forward as well.
That's right.
Roughly, broadly. That's right.
Got it. That's right.
Could you give us some details on the sort of ramp-up timelines of the new units in sort of Lucknow, Nagpur, also what's happening in Dwarka as far as expansion is concerned?
So, Nagpur we acquired on 9th of February last year, and Lucknow on the 7th of March. These are both profitable hospitals, and we intend to add on to this profitability. Of course, the first year, which is the current year, we will be putting all the building blocks and all the sort of doing whatever restructurings that we do. But having said that, it will still be accretive, and we will continue. I mean, of course, next year should be explosive as far as that is concerned, because this year is where we are going to be seeding all the value propositions within these two facilities. With respect to Dwarka, we will be starting commissioning the hospital shortly, early part of June, which is in the next couple of weeks, in fact. And we are looking forward to a strong ramp up. We are seeing very strong traction, both with doctors and inquiries in this hospital. So we believe the ramp up should be pretty good as well. But I think perhaps next year will be, although this year may be incremental, because at least initially, the operating losses of Dwarka will be absorbed by the present cash flows of both Lucknow and Nagpur. in fact, absorb and more, because the cash flows from those are significantly higher. But next year will be explosive year.
Are you saying that the Dwarka hospital to be up and running sometime in the next month, 2 months or so, right? That's
Next few weeks, early part of June.
Early part of June.
That's
so
right.
it's imminent in that sense. And you said for Nagpur and Lucknow, FY26 will be, you said, explosive. I mean, in terms of growth and everything in there, so it'll start contributing in a big way.
Yes, I mean, they had about 60-70 crores of EBITDA last year. This year, we will be adding on that. But, next year it should be more of a hockey stick, right? I mean, because we're going to be putting all the foundations in place, making all the changes, all the plans, and so on and so forth. So, we are going to be getting our act together, renovating, upgrading the infrastructure, and so on.
So what could FY26 numbers look like? I mean, a ballpark? If it were to be...
Well, I can't give you...
Yeah.
I'm going to avoid, I've always avoided giving forward-looking guidances. I'm going to continue doing that. But that should provide exponential growth from these facilities rather than incremental.
And these are how many beds? How many beds in total?
So these are between the two, they're 500 beds right at present. We are adding by the third quarter of the current year, we should be adding another 150 to 200 beds. Over the next 12 months, we should be adding another 300 beds.
Okay, all right. Abhay, also your international revenues, I think it's holding at around 150 crores, which is a jump on a year-on-year basis. Though on a sequential basis, it's a little flattish. I understand there were visa-related problems, which is hampering this business a little bit. But for the coming year, hopefully things get resolved. How do you see this business shaping up? And also, what could the potential contribution be to your total mix?
I mean, the present contribution is 9% of our revenues. You should look at this business on a quarter-on-quarter basis. More importantly, festival to festival basis. Certain festivals impact us more. So you should not seek to sort of rationalize it on a sequential quarter basis. I mean, just to give you an example, there was Eid in the Q4. So that impacts, people coming from Islamic countries to us. People travel less at that point of time. So, I mean, I won't read too much into the sequential growth. I think we've had the visa issues impacted us on a year-on-year basis, not so much on a quarter-on-quarter basis. I think on a year-to-year basis, not significantly. Normally, our growth has been about 23-24%. This quarter was 14%. But again, there was nothing secular which sort of sets it back, and I think we should be back to our original growth soon.
On an average, your margins have been sustained at this 28% mark, which is not bad given the kind of competition, capex and all of that, right? Do you think you can hold on to these margin levels?
I mean, capex doesn't really have anything to do with margins because that's more of a balance sheet item that, But having said that, like I clarified, our intention is always to do higher end work. So, I mean, if you do... just to give you an example, on an international patient, in percentage terms, your margins are lower, but in absolute terms, they're more. A clinical program in a liver transplant, your margins are significantly higher in value terms, but in percentage terms, they're lower than a dengue patient. And that's what you would seek to do. A higher-end clinical program or a better payer mix, through which eventually your margins can temper or can come down. So long as the EBITDA per bed keeps increasing. So again, I would like to direct you to that. Yes, 28% is something to be sort of happy with and this thing, but I'm not really preoccupied with that because I could have maintain the same margins, yet my EBITDA can stagnate, whilst my percentage margins can come down significantly, but my EBITDA can grow on an overall basis, and that is what I would be looking at.
So this EBITDA per bed is about what, 78 lakhs?
That's right, and that was an increase of I think 12 or 13%.
Yeah, and that's the increase already in FY24. So as you say, this is what you focused on. What should be again? I mean, what could you look at going forward? What can we look at for FY25 beyond? I mean, throwing in all these acquisitions as well, which will become fruitful and start contributing.
Yes, I'm just going to avoid again giving forward-looking guidances because we've not done that in the past either. But we've had, again, for the last 15 quarters, we've had both I think sequential growth every quarter as well as annualized growth, and we continue to believe that that will continue to happen on a EBITDA per bed. And it's a fairly robust double-digit growth that we've been enjoying, and the future should be similar.
Okay, all right. Abhay, final question before we let you go. You'll have big expansion plans coming up. I think 3,000 beds in total over the next 2.5 years or so. So what's your bed capacity and where is it headed?
Yes, so we were 3,500 beds. We've just added another 500 through acquisitions, and that makes us 4,000 beds. We had a brownfield capacity expansion of 2,700 beds, but now it's going to be 3,200 or 3,300 beds because there's further brownfield expansion opportunities in the two acquisitions that we've done. So that takes us to about 7,200, 7,300 beds in the next 2 to 3 years.
Okay, all right. Abhay, we'll let you go on that note. Thanks a lot for joining in and speaking to us on CNBC TV18. Well, let's do one thing. Let's talk about Zaggle Prepaid. It's buzzing on the back of a very strong Q4 performance. Their profits and revenues saw a stellar jump, but the margins contracted sequentially. Avinash Godkhindi, who's the co-promoter, managing director and CEO at Zaggle Prepaid Ocean Services, joins us now to talk about that. Avinash, thanks a lot for joining in. Can you tell us what is the kind of growth you're looking at? Q4, the growth was quite healthy, but what is the total order book at? What is the kind of growth that you can eke out in FY25?
Thank you. Thank you so much for having me here, Sonia. We're very happy and thrilled to have had our best ever quarter and year basis, EBITDA, PAT, revenue, every multiple that you can, look at. And, our growth projection, we have upped our growth projection for this year from earlier guidance was 40% plus. Now we are able to give you a guidance of 45 to 55%, and we are going to double in 2 years in terms of size.
So this is the revenue growth that you're talking about, where you've upped your guidance to
Yes.
45 to 50% for FY25.
45 to 55%, Sonia.
45 to 55%. What's the total order book at currently, and what kind of growth are you looking at there?
Sonia, we are a SaaS fintech. We're not an IT services company, so the order book model doesn't necessarily apply to us. Having said that, momentum is extremely strong, both on the corporate addition side, cross-sell is kicking in, and as well bank partners. We signed up some great banks last quarter. We had Axis Bank, we got empaneled with the Punjab National Bank, Indian Bank, Canara Bank. So our momentum on the bank partnership side has also been very, very heartening.
Avinash, so hi, morning, Prashant here. So revenues were about 776 crores in FY24.
Yes.
So just to put a number to it, and that was 40% growth in 24. What are you expecting in 25?
So about 45 to 55%, Prashant. So all of us can do the math. That's where it sits, and we are fairly bullish about the coming year.
All right. Now, to clear the margin point as well, which was slightly above 9% in 24. Again, here, what should we expect?
So our adjusted EBITDA margins for the last year...
The reported number is about 9.1, right?
So we gave a guidance on the adjusted EBITDA margins, Prashant. We had given a guidance of about 11 to 13%, and very happy to share that we have, upheld the guidance, and we were about 11% for the last financial year.
So this should be so for 25, Avinash, what would this number be?
So there, Prashant, we would want to, while we believe we'll be similar to current levels, we want to be a little conservative, and we see margin expansion, etc., kicking in, in the coming years, maybe 2 to 3 years and beyond, because we see tremendous opportunity to capture market share. See, these kind of opportunities do not come every day, and some of it is on the back of regulatory actions that happened recently. And as a stable, profitable, scaled-up fintech, we can see, very conservative banks also gravitating towards us. A lot of corporate customers who've been very cautious historically have started to sign up with us and work with us. So we are focused on capturing market share and growing the business. And this business has operating leverage inherently in it because it's a SaaS fintech business, and we are sure in the coming years it's going to kick in.
So I want to talk a little bit about your business spend management platform, Zoyer. Can you tell us what is the kind of potential you see there in this whole MSME space? What kind of growth are you looking at?
Sonia, see, last year we started clocking revenues in Zoyer, and it's already 30% of our overall revenues, right? So it's seen tremendous traction bundled with our business credit cards. And we see tremendous potential there because every company has vendors. Every company has payments that they need to make. And these are much more significant than the spends that companies make around their employees. Every company obviously has employees too, but employee spends are relatively small typically. And I'm talking about the overall economy. There are certain sectors like IT, etc., where employee spends may be larger, but overall, if you look at the economy, the vendor payouts are much larger. And here we are giving you a full suite. We are covering employees through Save. We're covering vendors through Zoyer. And we're covering channel partners through Propel. So the whole 9 yards is covered from a corporate perspective. And we are seeing great cross-sell for Zoyer as well. One of the things that we always felt we could do better, and we have started to do it last year, and we want to continue that momentum, is to be able to cross-sell Zoyer to our existing Propel and Save base. And that's coming across great. We've not yet dabbled too much in the MSME space, which we hope to tap into through partner banks. Banks whom we've signed up, banks like ICICI, Kotak, SBI, Access, Yes Bank, IndusInd Bank, and we want to tap into those pools through these the reach of these banks.
So you said that 30% of your revenues comes from Zoyer currently. How much can that grow to, since you're doing a lot of cross-selling as well now, how much can that contribution grow to over the next, say, 1 to 2 years? And in absolute terms, what kind of revenues are you looking at from Zoyer?
So, Sonia, let me put it this way, right? Beginning of last financial year, the contribution from Zoyer was 0. In just 1 year, it's ramped up to 30%, right? The platform has really been embraced by the market. People are liking to use it, and bundled with our cards, it sort of augments beautifully. So rather than putting in an absolute number, we see the opportunity very large here, and this can scale up in a very significant way in the coming years.
Avinash, just to take the sort of net earnings, so you did about 3.5 rupees in earnings in FY24. Right? Say by FY26, what could this number look like? I mean, just give us a sense at a PAT level.
See, as I told you, our guidance on growth is very strong for the next 2 years. We're going to double in size, right? And that's a fairly clear statement to make. I wouldn't go beyond that in terms of guidance as to how, by FY26 our PAT, etc. would look. But we are very confident about how things are looking.
So this is all organic, Avinash? The numbers that you're talking about?
Okay. Yes, this is all organic, Prashant, and we are looking at inorganic opportunities very seriously. And there's some very interesting opportunities that are opening up, and I can't talk about them because they're still in the works. But anything that comes inorganically is just going to be adding on top of this. That's going to be the cherry on the cake.
So that's plus. All right, lots happening, and it's a very interesting business with a lot of moving parts and strong network effect as well, as I think we've spoken in the past as well. Thanks very much, Avinash, for joining us. Great speaking with you, and appreciate your time here on CNBC-TV18. Good luck. So that's Zaggle Prepaid, which is up about 4% in a market which is down about, 40 points or so. So not very much going on at an index level. I just want to quickly make a mention of the broader market breadth. So, yesterday it was all large caps. I mean, not all, but large caps did much better than broader markets. Today as well, I mean, if you take a look at it, this market breadth is slightly negative now. Started strong, right at the word go, but 1,200 stocks are lower and about 1,100 stocks are higher at this stage. Paytm is down about 4.5%, 340. That's the biggest volume-led loser right now. There is Chola Finance, which is down 2.5%. Yesterday's listing. Go Digit is down a little bit, 1.33%, and there is a fair bit more, which is adding on the downside. I think we'll take a quick commercial break here. We'll come back with More on the other side. We'll get you some technical trading ideas as well. We'll sort of turn our eye and attention on, of course, what's happening in commodities. All of that in just a bit.
Welcome back. Well, let's do one thing. Let's just take a quick look at the market. Now, slightly under pressure. Nothing alarming, really. The Nifty is down about 40-odd points. Sensex is down 100 points. Mangalam is joining in to tell us about Bikaji and why you should be watching that one. Mangalam, over to you.
Looks like a lot of bhujia was consumed during the fourth quarter. That's exactly why I'm watching out for Bikaji. You know, good numbers coming in. Even if you look at the reported numbers, they would look extremely strong. That's largely because it's boosted by a 93.5 crore PLI, income that they got, which the company has recorded as other operating income. But if you adjust for that, despite that, there's a near 14% volume growth, 12.8% growth in their revenues, close to 521 crores is what they sold this year, with this quarter rather, with an EBITDA growth of about 10%. Margins too stable at around that 13.1% mark, and the net profit grew by about 22%. Now, if you look at ethnic snacks, which is basically bhujia, nearly 70% of their revenues coming in from there, that grew about 10.8%. Then the other parts of their business, which are fast growing but lower in contribution, like packaged sweets, western snacks and papad, all of them grew anywhere between 13 to 23%. So good growth across all parameters, margins improving, and the company is also diversifying outside of their core states. So those factors are working for them.
Okay, all right, Mangalam, thanks a lot for that. Well, I'm looking at JK Lakshmi Cement, and the numbers look quite good. So on the top line, there was a bit of a degrowth of close to around 4%. So volumes clearly didn't pick up. The other problem was that realizations were down by close to around 4% on a sequential basis. But despite of that, the EBITDA number looked much better. And on a sequential basis, when you see that margins expand and they don't have the support of either operating leverage or realizations, the kind of focus that they're putting in on the cost side is helping them. So they have been commissioning a couple of WHRS systems. Also, they have, upped their solar utilization levels. And that's reflected in the power and fuel costs, which on a year-on-year basis was down by close to around 20%. So these numbers look quite good. Remember, now it's not a small size company. It's a 16 million ton capacity. And they've also announced some capacity expansion plans. So on the back of that, valuations at $82 per ton, the street likes it, explains why the stock is still holding up with a gain of close to around 3%. But let's turn our attention to the pharma space. Orchid Pharma, well, the stock is under pressure. Ekta joins us to tell us more. Ekta?
Well, yes, a disappointing set of numbers which has come in for Orchid Pharma. So the revenue was up only around 3.4% on a year-on-year basis, and even on a Q-on-Q basis, the revenue did see a decline. It came in at around 217 crores versus 220 odd crores. What also disappointed were the margins, which came in at only 13.3% versus 18.9% year-on-year. The EBITDA came down by around 27% year-on-year. And on a Q-on-Q basis as well, the margins were 13.3 versus 16%. That really trickled down in terms of the profitability, which came in at around 33 odd crores versus 59 odd crores. And this compares to 33 crores versus 29 crores Q-on-Q. So a disappointment which has come in for Orchid Pharma, which has been pretty much a top-down disappointment, with the margins really standing out as the key negative.
All right. Well, Ekta, thanks very much for that. Finolex Cables, of course, has been a big mover from the word go. Upasana's got details here. Upasana, morning.
The company reported a strong set of numbers in its Q4 FY24, above the street estimates. The revenue saw an uptick of 14% on a Y-on-Y basis in its Q4 and stood at around 1,400 crore, while the street was working with a number of 1,329 crores, which is certainly above the street estimates. The revenue growth was mainly driven by growth in electrical cable segment, which contributes 86% of the company's overall revenues. Coming to this segment, the revenue saw an uptick of 16% on a Y-on-Y basis, while margins dipped 70 basis points and stood at around 12.1%. It is also important to know that the company's share of low-margin communication cables also decreased from 14% to 9% on a Y-on-Y basis. Now, coming to company's overall EBITDA margins, the margins were down about 30 basis points and stood at 11.6%. while the street was working with a number of 12%, which is slightly below the estimates. The PAT saw an uptick of 6% and stood at 186 crores, while street was working with a number of 145 crores. Hence, PAT also stood above the street estimates. So all in all, we are
Okay, all right. Let's focus on the bottom of your screen. The US FDA, well, they have issued a letter to Laurus Laboratories with regard to one of their facilities in Andhra Pradesh. And this letter, this untitled letter, is dated as May 16. Now, the reason that the stock, in fact, has bounced off the low point of the day, because Ekta is telling us that some analysts say that this particular unit has zero business for the regulated markets for the plant. And also, in the past, it's faced some US FDA issues. So the impact is not that much, which explains why from the low of the day, the stock has seen a bit of a recovery. So take note of the news, but also with regard to an analyst's impact, they're saying it doesn't have a big financial impact on the company, which explains why the stock has bounced off the day's low. For the time being, we slip into a short break. You come back, we'll get chatting with the management of Fortis Healthcare. Stay with us.
Okay, welcome back. You basically have the market, which is down, 50 points. So we started, by the way, with a 50-point drop. Then there was a 50, 60-point recovery. And then there's another leg down, which has sort of come through after the initial couple of minutes of trade. I was talking about how market breadth is a little mixed today, but I think now it's kind of evened out. 1,150 stocks are higher and about 1,200 stocks are lower at this point in time. We have the management of Fortis Healthcare. As I said, it's a hospitals heavy day. So we had Yatharth Hospitals, Max Healthcare. Now we have Fortis Healthcare, which came out with numbers. We have Ashutosh Raghuvanshi, Managing Director and CEO of the company, with us to take some questions. Mr. Raghuvanshi, good morning. Good to have you with us here. Thank you very much for your time, sir. Hospitals have all been doing very well. And, your performance in FY24 indicates that top line went up about nearly 10% or so. So you're at about 6893 crores in revenues. Could you give us a broad outline? If you want to give a specific number, that'll be fantastic. What should we expect FY25 to bring in as far as top line revenues are concerned, sir?
So we expect a similar growth, a double-digit growth this year as well. And that would be basically led by both the volume growth as well as the ARPOB growth. We have a lot of capacity expansion, which we have done. We have added about 246 beds last year, and we are adding about close to 400 beds this year. We'll be creating a capacity of about 700, but we will be operationalizing about 400. So with all this, we expect to be at least in double-digit growth.
Double digit. And the total beds after all of this expansion, etc., where will this number be at, say, in the next 1 year?
In next year, we are adding 700 beds, but we are operationalizing about 400 of those within this year.
So operational beds would be how many total?
Total beds would be about 4,800 at that time.
Okay. Sir, I wanted your thoughts on margins as well, because the hospital business margins have seen a significant improvement to 21%. And in Q4, I think you hit about 22.4% as well. What led to this improvement, and what is the expectation for FY25?
Yeah, so the expectation was that we would have about 70% occupancy, which we did not achieve. We achieved about 67% occupancy. However, the growth in ARPOB was high, and that was a result of the case mix change. We did a lot of high-end surgeries. We did close to about 4,000 robotic procedures, for instance, in this year. The surgical volumes grew by about 8% year on year. And that led to a better performance for the year, and certainly for this quarter as well. We expect this trend to continue. There was some one-off item here. So in the hospital side, I would say that the corrected EBITDA would be 21%, which is what we expected to close the year with. And we expect from here on, we would sustain it and better it as we go through this year.
So you were saying you'll sustain it at about this 21%, and perhaps you can even better it in FY25, correct?
That's right.
Okay, fair enough. There is a fear that some of the larger hospitals are seeing some plateauing in terms of volumes. You were talking about how you will see perhaps further volume growth, but you have incremental capex as well coming on board. Would that be a bit of a concern if the entire industry is seeing, slower growth or plateauing of volumes?
Not at all. I think the capacity which is available in India today is still deficient compared to what the requirements are. So whatever capex we are doing is for advancing the technology mainly, and the brownfield expansions which we are doing. So we are doing brownfield expansions in hospitals where already the occupancy figures are above 70%. And in some of these hospitals, it's nearing 80%. So that capacity absorption will happen very easily. So that is not a concern. Even in the last year, we did a total of about 700 crores of capex. Majority of it was for upgradation of the medical infrastructure, and some of it for enhancing some of the capacities. But that will continue. That is not a concern at all in my view. there is always a seasonality in healthcare business. This plateauing stage currently should not be seen as a trend. This is only a sort of a localized phenomena which is there for a short while.
All right. Hi, sir. Good morning and good to see you in. Nigel on this side. Let's turn our attention to the diagnostics part of the business. Now, that's been a relative underperformer. If you could tell us why the growth is not as much as, say, some of your peer groups, and how do you see the trajectory going ahead? Do you expect double-digit growth even in this vertical? What about margins? Do you see a possibility that you could gradually move towards that 20% odd?
Certainly, to start with, we definitely have had a disappointing performance on our diagnostic side. The growth has been almost just 2%, which is hardly anything. And that is on because of multiple reasons. We had a lot of challenges. We had also changed the brand last year. All those things impacted our business as well. But we are seeing that the diagnostic industry is getting stabilized now and the competitive pressures are lessening. So we expect Agilus also to do well and have a volume growth. We're expecting about 9 to 10% growth at least, and that would come on basis of increasing our specialized test menu. We have a lot of focus on the genetic testing, for instance, and with all that, we expect to have a healthier growth this coming year, and we certainly expect to take the margin to about 20%.
Okay, all right. And margins to 20% in the coming year itself? That's FY25?
That's right.
All right. And the growth of 9 to 10%, that's the volume number, sir, or the revenue number?
Revenue number.
Okay, all right. Got that out of the way. And since we're talking about Agilus, is there any timeline with regard to the IPO? I was reading a couple of articles just 2 or 3 days ago which suggested that maybe the PEs could want to dilute some stakes. So that's why you could be looking at an IPO. Could you clarify on that front? And what are the timelines about their IPO?
Yeah, so as far as the PE stake in Agilus is concerned, we have all our options open. The IPO for now, we had withdrawn. However, we will look at all the options and take appropriate call in the due course. As you might be aware that we have a put option on us from the PEs for 31% stake in Agilus. And in case that is exercised, we are contractually obliged to buy that from the PE stake. And we believe that this business can further create values. It has been underperforming with some structural changes, etc. And little more concentrated effort. This can go to a next level. So we think that there's a lot of value in this. We will decide at the appropriate time and certainly let you know at that time.
Yeah, absolutely. Mr. Raghuvanshi, that old saga of that IHH open offer, I think the matter is still sub judice. Could you give us an update? Where is that at? I mean, is there anything moving at all?
Yes, that is still sub judice. It is at the High Court level, and the issues we do not know when it will get resolved. But we are expecting that since the hearings are happening at a very good frequency, we should see some resolution happening possibly by the end of the year.
Are you close to sort of close to a point where the final arguments would be made, or it's still away? You're saying at least hearings are happening frequently. Sorry. Yeah, go on.
Yes. No, so what I was saying is that the hearings are happening very regularly and the final argument stage is coming there. So that's why we expect this to get resolved by the end of this year.
Okay, no, got that. Ms. Raghuvanshi, we'll leave it there. Good luck to you. Thank you very much for joining us and appreciate your time here on CNBC-TV18. So good conversation with Fortis Healthcare. Markets recovered again. I mean, before the Fortis conversation, Nifty was down 50-60 points. It's down 10 points now. So at lower levels, there is a bit of buoyancy, which is starting to appear once again. PSUs are doing very well. So Cochin Shipyard, Garden Reach, and so many others, Chennai Petro. I mean, these are some of the top volume-led gainers that we have at this point in time. Well, the markets, of course, also scaled to new highs. Nifty hit 23,000 early this morning. So how's the journey, this journey been to 23,000? My colleague Hormuz is standing by with some interesting data. Hormuz, over to you.
The journey has been anything but smooth sailing, if I can call that, for the Nifty for these 1,000 points that we've seen between 22 to 23,000. Now we scaled 22,000 for the first time in January this year, and since then there have been multiple attempts to retest these levels of 23,000. We went to 22,700, then we corrected to 21,700, then came back, then fell again, and now finally we are at these levels of 23,000 for the Nifty. And interestingly, none of the heavyweights find a mention in the top gainers list in this 1,000-point journey that we have seen from January this year. If you pull up that list, you'd see that the Nifty gainers there, Mahindra and Mahindra is the top gainer. They're 41% higher for M&M. Hindalco is the other one. So auto as a theme is among the top gainers, and as is metals, considering the recent rally that we have seen in metal stocks. Hindalco and Tata Steel as well among the top gainers there, and Bharti Airtel finds a mention with the stock also trading at record levels, 20% within this period as well. And while we mentioned that there were no heavyweights, that is also because one of the biggest sectors, that is IT, was among the top underperformers, and 4 out of the top 5 losers on the Nifty there are the top underperformers. There you can see HCL Tech, Infosys, Wipro, LTI, Mindtree, all of them seeing double-digit losses. HCL Tech being the biggest underperformer there, 19% lower within this journey, not participating in the rallies. Also Apollo Hospitals, a 10% drop for that as well. The top gain, they may have not found a name on the list of the top gainers, but the index heavyweights are definitely, in terms of point contributions, definitely find a mention. There you can see ICICI Bank there, HDFC Bank there, Mahindra & Mahindra, considering the rally it has seen, it may not have a very significant weightage on the Nifty, but the move has ensured a 167-point contribution there as well. Bharti Airtel and SBI complete the top 5 in terms of contributors. And on the downside, IT is topping the charts here as well. Infosys there, the biggest laggard during this period, 190 points lower there. HCL Tech, TCS, Wipro, and even Titan is finding a mention among the top underperformers. So it's been anything but smooth sailing for the Nifty between 22 to 23,000, but the landmark is conquered finally.
The IT point is interesting. I mean, of course, sector challenges plus large FII kind of sector, right, where FIs have been a big seller through the course of this year. Some 1.2 lakh crores net sellers from foreign investors. Hormuz, thanks very much for that. Vodafone Idea, the stock is at the bottom of the screen. It's up 7%, one of the biggest volume-led gainers. And, sort of it's a long line of brokers who've come over the last many weeks and upgraded their rating. But I think the most aggressive now in terms of a price target has been Vodafone Idea, has been UBS this morning, beg your pardon, on Idea, when they say that their target is about 18 rupees. A lot of this, of course, is premised on the hope that tariffs will go up 15-20%, and maybe even more by the end of the year. But immediately post-elections, you will see a tariff increase. So almost a consensus kind of building around that expectation of what happens next in the imminent future. So that is $15 on Vodafone Idea after some time. Well, it's a wrap on this edition of Bazaar as well from all of us here. It's goodbye. Thanks very much for watching. But stay with us. Chartbusters will pick up on the action in just a bit.